G'day guys, and welcome to the Daily Horizon View. The date today is the 8th of the 5th, 2019. We are looking at our top fives for the ASX exchange traded funds. Our spotlight today is CNEW, which is the VanEck Vectors China New ETF. Just a quick overview today, trying to vaguely recover some ground lost after yesterday, but unfortunately we still closed out at 0.85% down, which equated to a close in the All Ordinaries of 63.46. Pretty much the only thing that was up marginally was financials, everything else was in the red. We saw some movement on the upside for gold, silver. Platinum was down, West Texas Intermediate crude oil is down, and the rest were mixed. Oh, your soft commodities are actually up today. So look at our top 5 percentage rises. We had CNEW, GDX, QAG, QCB, and CETF. If you want to look at the highlight, our spotlight today, which was CNEW, just skip to the end. Should be sitting in the last 4 minutes of the video, so skip along to that. We had a rise in China New today of 2.24%, which equated to 15 cents. On pretty good volume, 39,500 shares traded today. So top 5 percentage falls. We had CUA, HJPN, RBTZ, IWLD, and HEUR. So CUA, as the avid listeners will know, is the ETF's S&P Biotech, and that tracks the S&P Biotech Select Industry Index. We had a fall today of 2.35%, which equated to $1.26 on OK volume for that ETF of 1,300 shares traded. Top 5 percentage rises, we saw GDX, CETF, IHCB, IGB, and ILB. GDX, for those who have forgotten, is the VanEck Vectors Gold Miners ETF. That tracks the New York Stock Exchange's ARCA Gold Miners Index, and that I think is pretty much the biggest index traded on the ASX, roughly $12 billion market cap. We saw a 69-cent rise today, which was 2.39% on a volume of 4,000 shares traded. We have our top $5 falls. We're looking at SPY, IJH, IVV, IHVV, VTS. So SPY is the State Street Spider S&P 500 ETF trust, and that one tracks the S&P 500 index. About 31 million in that when I last checked, and you'll get a small dividend of 1.76. We saw a pretty nice fall there of $4.90, which only equates to 1.18%, because that one trades out at $411. It's a big one, that one, on relatively low, or I should say very low volume today, only 512 shares traded. So top 5 number of trades. STW, VAS, VTS, VGS, and IVV. So we had STW, which is the State Street Spider S&P ASX 200 fund, and that one had 231 trades today. On the downward side, though, it lost 21 cents, or 0.36% of its value. So the top 5 volume for volume today, we had AAA, ETHI, ISO, FAIR, and STW. AAA, which is the Beta Shares Australia High Interest Cash ETF. That one has high interest deposit accounts in Australian banks such as ANZ, CBA and NAB. You'll get a nice little dividend of about 2% from that. That ETF has a market cap of about 1.4 billion, and the Morningstar rating in that one is neutral, so not good, not bad, neutral. So a gain of 1 cent today, which equated to 0.02%. Volume was 273,700 shares traded. So top 5 for value, we saw AAA, STW, IVV, VAS, and VGS. AAA was quite popular today by going by the volume we saw before, but that one racked up $13.7 million of value traded today. So the CNEW index seeks to provide investors with access to a portfolio of the most fundamentally sound companies with the best growth prospects in consumer discretionary, consumer staples, healthcare, technology, and all those companies are mainland China and listed in mainland China as well. So the index is the MSCI Market Greater China New Economy Index, which consists of 121 of the most fundamentally sound companies. And they're publicly traded in Shanghai and Shenzhen on the stock exchanges, and they're all A shares. So the index seeks to identify the companies within China with the best growth at reasonable prices, and they want also chasing long-term capital appreciation, so you want the share price to go up. So the index is equally weighted, which I like. That they'll rebalance it twice a year, so that gives each company an equal opportunity to contribute to the performance of the overall index. I like that, so it's not dominated by the top 10 companies in the index. So have a quick look here. Net asset value yesterday was $6.22, closed today out at $6.36. Quite an expensive management cost at 0.95%. Again, an annual dividend apparently. I'm guessing in July. Dividend yield at the moment is unknown because this ETF only started operating towards the end of last year. I think from memory is October or November. This ETF, CNEW, I think can give an investor exposure to the rapidly growing Chinese economy as it transitions away from dependency on financials, energy, materials. So, they're not exporting stuff, they're looking inwards now. Growing GDP per capita and more progressive domestic policy has played a major role in speeding up the transition to a domestic consumer story. The Chinese economy is set to become the largest in the world over the next few years. This represents an opportunity for the astute investor to take an early position in the new and emerging themes that will drive the growth of the Chinese economy. However, there are risks in China, and it's one of those ones that you should be cautious with. However, I think that to be overly cautious and not actually be contemplating investing in Asia is probably going to be a mistake in the long run. So we want to be able to take advantage of the growth runway that's still available with all the middle class people moving from the country to the city and looking for a better quality of life. Also have a look at IZZ as an option, or CETF, which is China News Big Brother, and Asia. That gives you a bit more broader bucket of stocks as opposed to just China. So it's definitely somewhere that we want to be looking, but as always, you need to be cautious. So we don't really want to be putting great amounts of funding here, but we just need to make sure that we're in the. So you can see from inception, late last year, you would have done reasonably well if you had your 10 grand in the ETF. You can see on the slide on the right hand side there, just a bit of a quick snapshot of the shift. So there's quite a large young population in China now. So the transition is fueling growth in consumer staples, consumer discretionary, technology and healthcare sectors. So definitely somewhere that we want to have some money to take advantage of the uptick. So as always, this is purely information. I don't know your personal circumstances. Always do some additional research and have a chat with a professional if you need additional advice. We are here to give you information, demystifying things for you, hopefully. Yeah, we really want to give you guys the courage to actually go out and have a go at these things yourself. They're not as tricky and as scary as it looks, but you do need to be educated, and everything that we need to be able to go and do these trades and make these decisions for ourselves is all available pretty much on the internet. You just need to know where to find it. So hopefully this is helping you guys out with that. So leave us a comment, give us a thumbs up, subscribe, greatly appreciated. Have a great day. Ciao.